OK, well, it's time for today's business news with Stephen Carroll. Let's start in China with new figures on economic growth, Stephen.
That's right. They're bad, but they're not as bad as had been expected. That's the general message from the Chinese economy. 7.4% was the magic number today. That was the figure at an annualised rate of how much the Chinese economy grew in the first 3 months of this year. As you can see, it does represent a slowdown over the recent quarters. In fact, the lowest rate of growth seen in 18 months. This is a challenge now for the Chinese government, which is aiming for growth of 7.5%, and we'll wait and see what they do as a result of these latest figures.
Now, Stephen, how did the markets react to that news?
Relief all round, actually. It had been expected to be worse. So as a result, the markets in Shanghai and in Hong Kong were nudged into positive territory. The real star performer in Asia today, though, was the Nikkei in Tokyo, helped by the tech firm SoftBank. They were up over 8.5% in trading today. That's partly down to their share in the Chinese e-commerce giant Alibaba. SoftBank owns 37% of that company, and they had reported excellent trading figures for the end of 2013. A strong start here in Europe today as well after the falls that we saw on the European markets yesterday. You can see Paris there up by over 1%. Shares, though, in the food giant Danone listed in Paris were down after disappointing results. Meanwhile, in London, the luxury group Burberry saw its shares jump by over 1% after reporting second half profits of up 19%.
Well, plenty of companies' news around this morning. What's caught your eye, Stephen?
I'm going to start with Credit Suisse, where profits fell by a third in the first quarter of this year. The lender says its business was affected by a challenging market environment, particularly in its investment banking division. The news will put Credit Suisse boss Brady Duggan under more pressure to make cuts, particularly in its trading business. And the world's third largest retailer, Tesco, was reported a 6% fall in trading profit for last year. Like-for-like sales were also down by 1.4%. The company says its earnings were hit by weak consumer sentiment and continued tough competition on the high street. Shares in the companies, though, are up over 4% in London today, as the company's CEO, Philip Clark, says he'll see Tesco through this difficult time.
Well, next to a new report on the cost of sending money home to African countries for migrants who've moved abroad.
These are called remittance payments, and they're a really important part of many African countries' economies. A study by the Overseas Development Institute, a think tank in the United Kingdom, claims that Africans were effectively paying a super tax on their remittance of up to $2 billion a year. According to their figures, the average cost of transferring money to sub-Saharan African countries is 12% of the cost of sending that money. That's above the global average of just 7.4%. The World Bank says that Nigeria receives the highest amount of these remittance payments, worth $21 billion last year. So a really huge effect it can have on economies. The ODI singled out, though, the two main operators in this sector, Western Union and MoneyGram, as one cause for the high prices. Those firms say, though, that it costs so much because of the regulations that are in place from the European Union and the United States.
Well, let's talk technology now. And the general public had to get their hands on the new Google Glass.
Yeah, there was a 24-hour sale for fans of Google Glass. They were able to buy the augmented reality glasses for $1,500 in a 24-hour sale by Google on Tuesday. The internet giant isn't sharing how many Google Glass it sold over the day, but critics say the high price tag of $1,500 could have held customers back from splashing out. Lower price may tempt them, though, in the future, unless, of course, they're turned off by the privacy concerns, as Catherine Clifford now explains.
A first chance for the US public to dip their toes into the mysterious world of Google Glass. Google's expanding their scope on the product, which until now has been largely kept at a distance from the public.
Right now, Google Glass is this really esoteric device that some people have seen, they've heard about it, they haven't had a chance to touch it, they're starting to misunderstand it. I think that's Google's big concern.
Google's hoping to gauge customer interest to further hone the device, which for now is still limited in terms of apps. Critics are questioning just how well the price tag of $1,500 per pair will go down in the mainstream market. And there are widespread privacy concerns. A watchdog report on Tuesday laid out the product's potential threats, emphasising that anyone could be secretly recorded by glass wearers, and that wearers themselves could risk putting more than they'd bargained for in the public eye.
This is not just a computer. This is spyware. When you wear these devices, you think you're wearing it, but really glass is wearing you. Google is wearing you. You're becoming a set of eyes for Google.
Google's expected to lower the price to $600 by 2016. And a BI intelligence report suggested that by then, Google Glass would be a mainstream product, selling millions.
Now, during that report, I could see Florence Vomino shaking her head in disgust. Not a fan of Google Glass?
Huge fan. Maybe I'll be converted, though.
Could happen. If the price comes down, that might help.
Has to come down a lot.
Remains to be seen. All right, Stephen, thanks very much for that business update.